Hi everybody, we're back with Johanna Zarro from the Cooperative Bank of Cape Cod, affectionately known as the Coop on Cape Cod. I'd like to thank Johanna for being here with us. She was gracious enough to take time out of her busy schedule to discuss today interest rates and a little bit about credit. Johanna, could you tell us how important is the interest rate for one that obtains a loan?
Interest rate, I think, is primarily the first thing that people think about. And they want to know what the lowest rate is that they can possibly get.
Okay. And fair to say the lower the rate, the more house someone can afford?
Pretty fair to say that.
Thank you. And the more higher the interest rate, obviously the higher your monthly loan payment's going to be, but it's a bit more complicated, isn't it?
It is.
Okay. So starting off, I often see an interest rate and then I see an APR. Could you explain to our buyers what the difference is?
Sure. So an interest rate is what you're paying monthly on the note, and an APR is the cost of the mortgage annualized over the year, and it includes the cost to actually obtain that mortgage.
So the APR is generally higher than the interest rate?
Yes.
Okay. And could you tell us what's the difference between a fixed rate and a variable rate?
Sure. So a fixed rate, you have your interest rate, never changes. Your monthly principal and interest payment stays the same for the life of the loan. A variable rate mortgage, it can adjust, and it can go up, it can go down, and I don't know.
So fair to say when you see the traditional 30-year fixed rate, that's the interest you pay for the entire 30 years, the rate.
Mm-hmm.
And then I know in another video we talked about 5/1s. Is that
Yes.
correct? So a 5/1 is, could you explain that?
So a 5/1 adjustable rate mortgage is it is locked in, fixed, I guess you could say, for 5 years.
Okay.
Every year thereafter, it can adjust. It can go up, it can go down.
Okay. So you're taking a little bit of risk, I would assume, for a lower interest rate?
That's correct.
Great. Could you tell us how does someone's credit affect their interest rate?
Well, it does, in a way, affect the interest rate. However, it doesn't necessarily have to.
Okay.
What we do here at the Coop is if you want to take a base rate, but your credit would put you into a category where it might be better for you to take a higher rate, you can actually still secure that base rate, and it just would mean that you would be bringing a little bit more money to the closing to secure that lower rate.
Okay, great. So it seems to me that it could be a little complicated. That's why they should talk to you, right?
Yes, that's why I know what I know.
How are interest rates currently?
They're very good. They've been in the threes for the most part, and pretty low.
So would you say it's fair to say now's the time to buy?
Now's the time to buy, for sure.
Thank you. It seems to me that, this is a topic where someone should really be, if they're really considering buying, calling you, asking you some questions, maybe providing you with a little information as to what their situation is, and perhaps you could help them into a product that would be helpful for them.
Yes, I would love to do that.
Great. Obviously, we can't cover everything in a short video. Don't just settle for any interest rate. You should be shopping around. You should be calling me at Cape Life Properties, calling Johanna at the Cooperative Bank of Cape Cod, and together we'll get you the best interest rate possible for your situation. Remember, it's not just any life, it's the Cape Life.